Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on Sunday, October 15th, 2017. In this edition of your weekend video newsletter, we'll talk about the indices and where they might be headed. Note, small caps did have a down week after hitting all-time highs several days in a row. That would indicate risk off. First time we've seen that in several weeks, so that's something to pay attention to. The S&P 500 is up 14% year to date, Nasdaq 25%, and the market is in an up cycle, but it is at extremes. The Wilshire 5000, important to watch as a broad measure of market sentiment, is seeing some outflows of capital. Shaken money flow is dropping. We want to watch that. Okay, here is the Dow Jones Composite. We'll start off with this first. 65 stocks in the industrials, utilities, and transports. It's considered Dow theory. And we see one of the first distribution days in some time. The last one we saw was here, back when we tested the 9 and 20 EMA on higher volume. We see two distribution days last week. One on Monday and then again on Friday, above average volume. Watch MACD. If MACD starts to turn down, Stowe could trigger, and we could get a trigger on RSI as well. Doesn't mean that this has to break down immediately, but we are watching this volume by price band right around 7,700 for the nearest short-term support on any pullbacks. The Dow Industrials of 30 stocks show a little bit different picture. A doji on Friday, pretty much sideways action with the 9 and 20 EMA rising. We're building a volume by price bar at highs, RSI showing muscle, and volume is a little bit different. We did see that distribution day on Monday and again on Thursday. However, Friday did finish green. MACD showing signs it could turn or flatten out, and Stowe is overbought. If we shift gears for a minute, last week we saw 254.70, lots and lots of blocks, and then we broke above that level on Wednesday, flagged out on Thursday with a doji pattern in a very tight range of about 75 cents to $1, and then Friday we broke above that 254.70. And of course, one of the most important things to us is keeping an eye on the number of stocks advancing versus the number of stocks declining on a cumulative basis, and that's what this chart points out. Prior to the March dip in the indices and also in August, this indicator dropped down into the red zone. We don't see that yet, so at this point in time, Monday, Tuesday looked pretty good. Now, if this were to dip down on Monday and then follow through on Tuesday, that would be a different story. That would be a sell signal and a reason to start liquidating and reducing position size. Pegged at 100, the green line. And if a rune down continued to drop, which we saw all last week, the result being the price action we saw in the FANG stocks, pushing to all-time highs. So if this continues, and A rune's up stays pegged at 100, A rune down continues to drop, that's the all clear signal for Nasdaq at the present time. Previously, we had seen this triple top sort of look around the 6,000 level, which we needed to get above. And at that time, the last top, we saw an extreme in the cycle. As we dipped lower and price action followed, we started to cycle up early in October. And since that time, we broke above the 6,012 mark and all-time highs. Okay, reviewing sectors for potential this week, we see positive changes in metals and mining, consumer staples, food and beverage stocks. Okay, as we can see, 0.65 changing to 1.48, changing from red to slightly yellow. Whereas we saw weakness in energy and financials, changing from greens to lime to yellows, with improvements in building construction, REITs, technology, internet, semiconductors, i.e. NVIDIA, as well as utilities. So if you're trading any of these sectors, make sure you pay attention to them. Pause the video. If you're in a sector that's turning from green to yellows to reds, that's a clear warning sign. These cycles are on a weekly basis. If you're trading international markets, most of the international markets look pretty strong. We got Brazil again. You can see weekly closes on Brazil continue to increase. So check out EWZ. That might be a nice trade. Okay, here are the sectors. The upper panel is relative strength. What you're looking for is a trend higher. Any pivot lows should be following through to the upside. As we can see, EEB, BRIC ETF is rising, so BRICS could be a good potential trade this week. We've got RSI rising. EPP, this is the MSCI Pacific, ex-Japan, so all of the Southeast Asia, as we pointed out previously, is looking good, so that's a potential trade there as well. Here is the IBD 50 list for the week. If you are a new member, please understand that we focus on the IBD 50 list for our watch list, namely because it's the strongest names in the group, usually outperform the S&P 500, and they're highlighted by Investors Business Daily. We keep an eye on these names, as it is my goal to help you make money and lose as little as possible. And MACD looks like it could turn as a function of price. Okay, traders, that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com. I will send out a watch list later this evening, as usual. Go over the video a couple of times, watch the setups towards the end of the video that we highlight on the IBD 50, and focus on those things on stocks that you may be interested in. We're also interested in JetBlue, LUV, Micron, QSR, USG, Visa, MasterCard, and also the steel stocks. So look for those wicks to set up and pay attention to the block trades that we announced during the broadcast. Otherwise, we'll see you later, and I'll talk to you soon. I hope this helps. Take care.